We have pending home sales. We have PCE. We have jobs data for the month of July, or month of August, excuse me. We also need to talk about what Zillow and Fannie Mae are saying about the housing market. And yes, I want to be clear. I don't think anyone should be buying a home or an investment property unless they know the following. Folks, let's get into it. It is Monday, August 28th, and this is your daily financial news. Let's first just start with new listing data. Folks, you need to follow Logan from Housing Wire. He puts out weekly summaries of what is going on in the housing market. He is talking about the housing new listing data being the lowest ever recorded in human history. The last 6 to 8 weeks, he has felt the data was trending. It was trending negatively, but in an orderly fashion. That changed last week. In the span of 7 days, new listings data took almost a 10% drop, which is unusual for a week. Now, as Logan goes on to say, take a deep breath. The data sometimes is choppy, but he did indicate that this is a trend that is worth watching. Just for example, again, if you look at the charts that Logan prints out, we are at all-time lows. We make 2020, 2021, 2022 new listing activity look active. We are below all of those by a significant portion. This week was a noticeable drop. So we went from last week, 60,295. This week, that was just reported, 55,291. Folks, remember what I called in very early August. We are going to break the 4 million transaction. And then what I called probably around August 10th, we are also going to break 4 million in September. The longer rates stay up around 7.5%, this data does not get better. The only people that are selling have to sell. And let's not forget what Barbara Corcoran said from Shark Tank. She would advise sellers, don't list. Don't list. Wait for the spring. Wait for rates to come down. If more and more agents or more advisors are saying don't list, do we see new listing data break 50,000? Folks, as I've said for over a year, the housing market is broken. Most people in the YouTube world talk about demand. As somebody who studied economics, the whole economy goes on supply and demand. And what people fundamentally missed, which we have brought you here, is that the Fed breaking the housing market has fundamentally broken the housing market. What we have seen for the last 40 years, entry level, move up, luxury, we have lost the middle and we're losing the luxury. What is left? Entry level. Builders are cleaning up. If you have to sell and you have a clean property, it will go, but there's no inventory. Frankly, at this rate, if rates go to 8 or 8.5 or 9, I don't think it impacts price. There's nothing, nobody is selling. So this is something certainly to watch out for. But again, as Barbara indicates, if you wait to the spring and rates come down, what happens? There is a larger and larger buyer pool called marginal demand that right now is sitting on their hands. And the longer that rates stay above 7, the easier it will be for them to say 7 bad, 6 good. Last year, we taught investors or buyers that 6 was bad, 5 was good. We are now going to spend probably the entire month of August above 7. That psychology is going to drive home buyers to say 6 is good. So we shall see. It is going to get very, very interesting. But yes, Do yourself a favor. Follow Logan on Twitter or X. He is a wonderful follow. He puts out active information. So thanks, Logan. Next, let's talk about Alex Hormozi. Again, I talked about him yesterday. I'm kind of going down the Alex Hormozi rabbit hole. I like what he says. I like how simply he says it. I like how, I don't know, abrupt, honest, kind of shake you. I like the way he says things. Alex Hormozi talks about you can get good enough at something with 20 hours of focused work. That's the problem. I talk about focus and daily discipline. I have a course called How to Get Started One Rental at a Time. It's $400. All it does is ask you to focus and have daily discipline. Alex Hormozi says it takes 20 hours of focused effort to be good at something. So I did some math, right? 20 minutes for 20 hours, that is 60 days. Is that right? Yeah, that's 60 days. What I typically ask you to do is do 90 days. Alex Hormozi goes on further to say, if you do 20 minutes a day, or if you do something for 20 hours, you'll be good enough. If you do it for 90 days, you could be great. If you do it for a decade, you could have figured it out. Folks, what do I tell you all the time about getting wealthy? First, you got to create dry powder, increase income, lower expense, or do both. You got to become elite at something. For me, that's a buy box, but it could be whatever you're interested in. And then time. It takes a decade. I just think it's really interesting that more and more people that have done amazing things remind you that it takes focus and daily discipline. I know you're interested. I know you're excited. I know you're nervous. Let's remove the confusion. Let's remove optionality. Let's pick a market. Let's pick a buy box. Let's look at it every day. Let's grow the network. Let's join a community of 1,000 people sharing and winning. One Rental at a Time is a special place of people that are doing it. We're buying good or great deals. We'll talk more about that in a minute. Housing and economic data of the week. There's lots of things coming. First, we have pending home sales. Actually, first, tomorrow, we have Case-Shiller and FHFA. These are housing price data. This data, it will be reported at the end of August, and it will be June data. I suspect home prices will go up well over 1%. But again, remember, we have entered the seasonally slow period, and we're reporting numbers on the hot period. So it's just no overreaction. It's going to be what it's going to be. It'll be positive. We'll be at new record levels. But again, it's June data reported at the end of August. For heaven's sake, it might as well be September. Then on Wednesday, we get pending home sales. I've been really trying to figure out what the expectations for pending home sales are. And near as I can tell, the expectation for pending home sales are negative 0.2%. I'm guessing that's on a month-on-month basis. Folks, I think pending home sales could be down 2% or more, not 0.2 as the experts say. It'll be very interesting. I believe the pending home sales data is for August. I actually have to go back and check if it's July data. It's kind of ho-hum. But again, pending home sales, month of August, transactions, it's going lower, going lower, going lower. From there, then we get Thursday's PCE, personal consumption expenditure, specifically PCE core, which is the Fed's favorite gauge. It is the variable that they want to get to the magical 2%. Currently sits at 4.3%. Expectations have it being flat for the month, staying at 4.3. Again, remember this is data at the end of August. It's for July. We shall see. The first report that I believe will show the housing rolling over will be CPI. I think it's the week of the 10th, right? That's September week. I think it's the 11th. It might be the 12th. So that's the data to pay attention to. This is the last inflation reading for July. So it is what it is. What else do we got? Oh, then job growth. This is the one to watch. I think this could be market moving. Friday. How many jobs did we add in the month of July? Expectations are 160,000. Last month, we did 187,000. Frankly, what we want to see is less than 160. If you want to know the Fed will pause in September, we need a number 160 or below. If we get a number, for example, of 300, that puts a Fed rate increase on the table for September. The other thing to be watching for is the unemployment rate. The unemployment rate was last at 3.5. Expectations are 3.5. I am hoping it goes to 3.6. The Fed needs to see this lagging indicator moving in that direction. So these are things that we have to watch. Fannie Mae and Zillow. Let's talk about Zillow first. First, we've talked about Zillow a lot on this channel. A year or two ago, we were making fun of them for being horrible flippers and losing $1 billion or whatever it was. Well, right now, folks, Zillow is a housing bull. Housing bull. Not only did they announce the 1% down payment program we had talked about yesterday, but now Zillow is calling for, I want to make sure I get this right, 6.5% jump in home prices July to July. 6.5%. That's median home price, just so we're clear. To which I would tell you, I'll take the under. I don't think there's a chance we see 6.5. 6.5 would be a problem. We can't keep adding these above, like I think the historical average is around 4%, like 3.8. We can't nearly double that. It eventually leads to a problem. We need housing to be flat for years. Now, your city, your buy box, your area will operate differently. I'm talking about at a national level. But yes, folks, Zillow is a housing bull at 6.5%. How about Fannie Mae? I actually think Fannie Mae is watching this channel. Fannie Mae is saying things like, the housing market is stuck in a rut. It will be stuck in a rut for a long time, even if we avoid a recession. Folks, this is unfortunately going to be years. I know if you are in the real estate industry, it's not fun to hear. If you are paid on transactions, an appraiser, an inspector, agent, broker, title, escrow, whatever it is, do yourself a favor. Buckle up, reduce your spending, and then figure out how to grow into this. You will have less competition. I suspect there could be 25% less agents in a couple of years. Think about that. So again, get your money right, get your expenditures, as Brian Lebo calls it, MOLE, month of life. How long can you survive on what you have? Then get out and network, understand what's going on. Find listings, find investors. It is possible. And finally, let's get to the thing that I said at the open. Don't buy real estate. Don't buy a home. Don't buy an investment property until you have taken the time to learn your buy box and learn average. I don't think anyone should write an offer until they can intelligently tell people an average deal in my market is X. Now, if you're buying a home, maybe X is a price. If you're an investor, I think X is yield or return on capital. Cash on cash, whatever you want to call it. Again, back to Alex Hormozi. It doesn't take a long time. 20 minutes a day for 90 days of focused execution should get you to the point where you could say, Michael, an average deal is X. And then, and only then, when you could say an average deal is X, do we start writing offers. Because The magic of this game is never being average. You learn average so that you can write good or great offers. Again, very simply said, good is 1.5 points above average and great is 3 points above average. Simply said. So if your average is 5, you're writing 6.5. Or if you're getting greedy, maybe 8, 8.5, whatever you want. But don't guess. Don't gamble. Folks, I can't tell you this enough. Sellers who are listing their property today at 7.5%, 8% mortgage rates are going to be motivated sellers as days on markets grow. Days on market will double. Active inventory will go up 3, 4, 5%. And the crash bros and doomers will be wrong again. Prices will be flat. If you happen to be shopping in the luxury market, your timing is impeccable. There probably will be never a better time to buy a luxury property at a significant discount. I'm talking 10, 20, 30. Some of you will get 40 or 50% off if that is where you are shopping. This is the game. This is our time. Don't rush. Do the work. Don't gamble. And then finally, please watch your social media feed. You need to cut out the poison, the doom. It is not a time for that. It is a time for doing the work, believing in yourself, and getting after it. I don't want you to say in a couple of years, I shoulda, woulda, coulda. And again, let's be very clear. I am not telling you to buy anything. I'm asking, I'm imploring, I'm frankly begging you to simply do the work. If you do the work and figure out that your market is negative and it's an alligator, congratulations. Put your money in a money market fund, switch markets, whatever you want to do, but at least you know. At least you know. Alrighty, folks, that's what I got for you. It is, Monday the 28th. You have an amazing day. Like, subscribe, comment. Thank you for the support of the new channel, the Daily Financial News. I think we just went over 4,000 hours. So hopefully in the next couple of days, that channel will be monetized. I want to thank all of you for helping us get there in about a month. You got that new channel to monetization in, I think it was 1 month and 1 day. So thank you very much. We'll see what happens. Bye-bye.